So we are here to discuss about the preparation of partners capital account. So in order to understand how to prepare partners capital account, we must know the meaning of partners capital account. So basically it is an account which represents the partner's interest in the business. In case of partnership business, a separate capital account is maintained for each of the partners. The capital account of the partners will be maintained by following any of the two methods. The first method is the fluctuating capital method and the other is fixed capital method. So let's understand these methods briefly. Fixed capital method or fixed capital accounts. Under this method, capitals of the partners remain fixed, or you can say it does not changes every year. Capital accounts of the partners will show always credit balances. Under this method, mainly two accounts are prepared, that is partners capital account and partners current account, which are shown here in the figure. So there are two situations when fixed capital of the partners may change. The situation one, when additional capital is introduced by the partners, or you can say when any partner brings additional capital into the firm, then the capital balance will increase. The situation two, when some part of the capital is withdrawn permanently by the partners. In situation two, if any partners withdraw their capital permanently from the business, their capital account will reduce or their capital will reduce from the firm. Okay. And the other account which is prepared is partners current account. So basically partners current account shows the profit or the share of profit and any of the thing which is basically distributed to partners by the firm. On the debit side, you can see if any capital is withdrawn temporarily, that is called drawings, it will be written on the debit side. Let's say example, there are two partners A and B. On the credit side, you can see that if there is any balance on the credit side, it will be written by balance BD, and all the distributable profit, for example, interest on capital, salary, remuneration, commission, bonus, etc., all will be written on the credit side. Okay, now move to our fluctuating capital method. So fluctuating capital account or method. Under this method, only one account is prepared, that is partner's capital account. It may show debit or credit balance both. Okay, so what are the items of credit side items? Let's see. Number one, balance of capital or capital introduced by the partners. That is the capital in the beginning. Second is additional capital, if any, contributed by the partners. Third is interest on capital. Fourth, salary remuneration to the partners. And fifth, commission, bonus, anything. Or last is the share of profit. On the debit side, in the fluctuating capital account, in the partners capital account, uh, we can see withdrawal of capital, that is permanently, drawings made during the year, that is temporary withdrawal of capital, interest on drawings, share of losses, and any closing balance. So here is the partner's capital account under fluctuating capital method. So on the debit side, you can see that to cash or bank withdraw of capital, this is the permanent withdrawal of capital, and the drawings, which is the temporary withdrawal of capital, interest on drawings, which is charged by the firm to the partners, and profit and loss if it is transferred, uh, if it is profit and loss that is shown on the balance sheet. On the credit side, you can see the balance BD is written. It means the business is already an existing one. Okay. So on the credit side, we write the cash or bank if any additional capital is brought by the any partner, interest on capital, salary, remuneration, commission, bonus. Okay. So after balancing all these account, uh, we'll get either by balance CD or by balance or to balance CD. So we will transfer these amount on the balance sheet. Okay.